Oh my God, Mike, thank you so much for having me. I'm really excited to be here. Ladies and gentlemen, I'm not a forecaster. You know, as a former pork chop salesman, somehow I made it to Lehman Brothers, and I was a trader there. It felt like you're on the deck of the Titanic, Mike, you know, as you're heading toward the iceberg. And our first book has been published in 12 languages. I tell my wife once a month, as a former Lehman trader, if we sell 1 million books, we'll break even on our Lehman stock. But I'm really, the best part of, leaving Wall Street and going on the speaking tour, I've done 140 speeches in 16 countries. The best part is the people that you meet. And over a decade ago, we created a Bloomberg chat with hedge funds, mutual funds, and pension funds. And the fascinating thing about the chat, it's like a live ideas dinner. The fascinating thing is you can triangulate information during the week, during the day, during the month, and you can see trends develop. And that's how we put together our new book, How to Listen to Market Speak. We wrote it 2020-21. There's a chapter in here about nuclear power and uranium, the power grid. Stephanie had some really cool themes, and a lot of the themes are in the book. There's a chapter about copper. Just think of the structures in the Ukraine, the structures in Los Angeles, Gaza, the power grid. These are huge themes that are in the book, written 2 years ago, but I owe so much to my mentors. It's a burning desire to actually reach out and ask people. I'm a good asker, and I learned so much in the chat, and I want to share some of that with you today. And that's how we do it. You can actually see a narrative in the conversations in the chat, in the Bloomberg chat. We share this with our advisors on our Discord room. Anybody that wants to be a part of this, it's info@thebeartrapsupport.com, info@thebeartrapsupport.com. But you can see the narratives in the chat, the long-term big themes, and then once in a while you see them move over to sell-side research, and then you see the narratives go out into Barron's and things like that. And so we're looking to get ahead of the curve. The uranium trade's getting a little long in the tooth here, still has a long way to go. Natural gas trade, copper, platinum and palladium, there's a big part of the book about hard assets. 27 trillion in the NASDAQ 100, 27 trillion. In 2000 at the low in 22, into 23, there was 12 trillion in the NASDAQ 100. So I've gone from 12 trillion in the NASDAQ 100 to 28 trillion now, 28 trillion. The entire platinum and palladium universe, if you add up the entire market cap, you're talking about $300 billion. All the gold ever mined in the history of humanity would fill up an Olympic-sized swimming pool. All the platinum and palladium ever mined would go up to your ankles in that pool. So big themes we talk about in the book, and once again, we get these ideas from our institutional investors. When there's 2 to 3 institutional investors that don't know each other in our live ideas dinner in the Bloomberg chat, and they don't know each other, and all of a sudden, but you trust them. You trust them in commodities, you trust them in SOFR futures, you trust them in high yield, and all of a sudden, they're onto a new theme. That's when we think we're onto something. We're going to talk about some themes here. How many people have ever been to Omaha to see the Berkshire annual meeting? Charlie Munger sat down with me for the book, David Tepper, David Einhorn. I'm so grateful to our contributors and our friends. But Charlie had read my first book, and it's amazing, that Berkshire annual meeting, because it's 30,000 investors in a large stadium, and Charlie said, come on out, I want to sit down with you, I want to learn about Lehman Brothers, and I want to share some secrets with you. So my wife and I went out on the Friday night. We had a great time, cocktail party. Saturday, we went to the Quest Center, enjoyed the time with Charlie and Warren were up on stage. And there was a lady next to me. And I said, after about an hour, I said, how long does this Q&A go on for? And she said, well, about 6 hours. I look over at my wife, Annabella. I'm getting the death stare. I mean, absolute death. And she says, honey, I'm really getting hungry. Can we get them? We lived in New York for 15 years. And she goes, I'm really in the mood for some sushi. I said, sushi, honey, we're in Omaha, Nebraska. The next day, I go over to the Marriott, and you walk through the foyer. In one room, there's Buffett with the sovereign wealth funds. In another room, across the way, there's Gates and the pension funds. I go into a very small room, and I'm waiting for Charlie, and I tell my wife, Annabelle, I said, Charlie, I only have 30 minutes with Charlie Munger, one of my favorite investors of all time. So just come, and when he comes in, just say hi and goodbye. And I want to have one-on-one time with Charlie. She says, no problem. So Charlie comes in, we meet him and his assistant. Annabelle starts to walk out of the room. He grabs her by the arm, says, young lady, I want you to know something. Hardship is good for you. Oh my God. I said, Mr. Munger, you're one of the richest men on earth. What do you know about hardship? He said, Larry, 1956, I had 16 lawyers in Los Angeles in my law firm. On a Wednesday afternoon at 3 o'clock, 9 of them walked out the front door. He woke up in a cold sweat at 3 in the morning, leaned over to his wife, and he said, honey, if I lost everything, would you still love me? She said, I'd love you, but I sure would miss you. And Charlie, gave me some time in the book. He really helped me understand some themes about the way Berkshire operates internally. He hated Dick Fuld. Richard Fuld and the Lehman management team, you never saw them. I mean, absolutely. I'm in the documentary called Inside Job. We won the Academy Award, and there's a scene in the movie where Dick Fuld goes into the private elevator every day because he didn't want to be seen by the troops. But that's the thing about Berkshire. I love the transparency, and I love some of the secrets. So this is interesting. So one thing clients are talking about now is not just reshoring and not just commodity prices and not just tariffs, but the Fed, if you listen to every Fed meeting, there's one sentence that they say, that Powell or any Fed chair says every time. Long-term inflation expectations remain well anchored. And the reason they say that is they want to instill confidence in their ability to control inflation. And what's fascinating is that the fiscal and monetary response to Lehman Brothers was $4 trillion. The fiscal and monetary response to COVID, the regional bank crisis of 2023, and the fiscal juicing into the election, 16 trillion. So 4 versus 16, 4 versus 16. And it's the situation in Washington, everybody knows the situation in Washington. They're just smoking in the dynamite shed. And I think we really got to keep an eye in the chat. The clients have their eye. Our institutional clients are really watching break-evens, because if long-term inflation expectations become unanchored, and this is a big theme in our book, then the great migration of capital from financial assets, which are just paper certificates, over to hard assets. And what's fascinating, you've seen it. It started off with gold. They call gold the mothership, right? This started after that 2020 fiscal orgy, I'd say, and then the 2023-24 fiscal orgy. The migration of capital into hard assets and Bitcoin really kicked off 2020-21, and then it's spread in recent years to silver, copper, platinum, and palladium. So it's very clear you're seeing some migration, but at the end of the day, there's 28 trillion in the NASDAQ 100. Take a guess in 2014. Okay, take a guess, all the energy stocks combined. Can anybody guess the value of all the energy stocks combined in 2014, 15? Anybody? Give you a hint, a little bit less than, about 3.2 trillion. So 3.2 trillion, all the oil and gas stocks combined. 3.2. The NASDAQ 100 in 2014, 15 was $4 trillion. So we've gone from 4 trillion to 28. Oil and gas stocks have gone from 3.4 trillion to maybe 2.8. So the spread between the oil and gas complex and the NASDAQ 100 has gone from roughly 600 billion to now 2.8 trillion versus 28 trillion. So as you can imagine, if there is a great migration of capital, think of like a portfolio from 1968 to 81, right? You wanted a portfolio that was heavy on hard assets. And in that regime, guess what? We had global conflicts. We had supply chains that didn't work very well. And we had more sustained bond yields globally and in the United States and more sustained inflation. So we talk about this in the book, the discounted cash flow model. If you actually look at the DCF model, companies, if you're a software company and you have 10 years of cash flows, those cash flows are worth a lot less in a sustained interest rate inflation environment. And so what happens is, as you move toward a different world, a multipolar world, global conflicts, higher bond yields, more sustained inflation, then portfolio construction actually changes and people start to invest in companies that own assets in the ground, that own hard assets, that own natural gas, that own uranium. So these sectors are crushing the S&P this year. And it's interesting that it's happening as the market is making, there's a rotation going on, but still, once again, the NASDAQ 100 is still the beast. But can you imagine out of that 28 trillion, if 4 or 5 trillion moves over toward hard asset companies, you're talking about companies, the risk reward in hard assets relative to financial assets is spectacular, the risk reward. Financial assets, the S&P and the Qs, it's the most crowded trade in the world. And passive investing is, I think Jack Bogle, if he really knew right now what was happening, passive investing with indexes, and you saw our former speaker, you see the returns, right? Think about this, index ARB funds that we're talking to in our chat, they're making the point to me, this is fascinating. So index ARB funds, they're arbing, essentially, they're manipulating passive investing because they know that Vanguard, State Street, and BlackRock are holding all the shares, right? So there's no supply of shares. And if the company's buying back shares, there's naturally no real shares for sale. And what index ARB funds do is they get a cabal of 3 or 4 or 5 funds together, and they're juicing stocks like Costco and Walmart. And like I said, if they know there's a buyback plan, and they know that Vanguard, State Street, and BlackRock are not going to sell the shares, then the true tradable float is so tiny that a cabal can juice major parts of the index higher. This is what's been happening the last year and a half. And they got up earlier in the year, but they're back. And so that's why this is a game you got to be very careful of how you play indexes, because passive investing is become such a psychology, it's being manipulated. Look at stocks when they go into the S&P. Lululemon went into the S&P, 200 to 300% move as it went in, because people are gaming S&P inclusion because of the size of passive investing. So looking forward, what are clients talking about in our Bloomberg chat? And one of the things we do is we're going to host an ideas dinner in Los Angeles and San Francisco in the coming days. Anybody that wants to be a part of that, anybody has friends in LA, join us, because what we do in the dinners is the same thing we do in the chat room on the Bloomberg terminal. And what clients are talking about is inflation in terms of the Bloomberg Commodity Index. So as you can see here, you've got much higher lows with the BCOM, and you've got lower CPI. So the probability that CPI plays a little catch up, we saw a little taste of this earlier this week. And so we think, and I think smart money's starting to bet on an inflation bounce for later in the year. And I think that's why Trump's team is so nervous, because they know that if they don't cut rates soon and we get a bounce in inflation, they're going to have a really difficult time cutting rates, right? So we're kind of moving toward that stagflation portfolio. And once again, your break-evens, this is another view. I call it the lost world, right? So what's amazing is look at how much higher we are than the previous 10-year high for break-even. So once again, long-term inflation expectations are becoming far, far, far less anchored. And in that kind of world, you need a whole new portfolio construction. Gasoline. It's kind of remarkable here. I mean, you've got this trend higher, up 16% since December. Oil, gas, this is another big, big inflation driver. Once again, this is pointing to a probability of an inflation bounce later in the year, and it probably, I think, will happen between now and, say, November. That's something that's going to really, really, I think, continue to push money into that stagflationary portfolio. Fed funds, can you believe, don't show Trump this chart. Whatever you do, don't tell Trump that the Bank of Canada has cut rates down to 2.75% and the Fed funds is up at 450. Trump would absolutely have a heart attack. Bank of Canada has a problem with negative amortization loans, and I think they're panicking. Once again, global central banks, fiscal juice in Europe. Do you know in the German finance ministry, there's a picture of black zero? These guys had the Greeks by the throat 10 years ago on austerity, right? They had the Greeks up against the wall, forcing austerity down their throat, and now they're fiscal juicing. They want American exceptionalism, right? So that's the trend, and that's, once again, that's another global inflation driver. There are massive deflationary forces like AI, which we can get into, but the global inflation drivers that kicked off in 2020, 21, 22 are still with us. And then, you know, the bounce in 10s, this is interesting. So in the last week, the French 30s, UK 30s, German 30s, and US 30s are all hitting new highs. Japan as well. That's very rare that you get 5 big bond issuers with bond yields at new highs. And so I think the Trump team is really concerned with Brent. And if you think about stocks or sectors, one thing I love Stephanie, because she always makes me think about different trends and rotation that's in different sectors. Stephanie Link, God bless you, because she's been such a great help to me over the years. What we're seeing here is U.S. offshore is now like 12, 13% of production. We believe, when you talk to the Trump team, and we're hearing this intelligence from our Bloomberg chat with our institutions, we think they want to take it up to 18%. Offshore drilling, so that means oil services, Weatherford trading at 2 to 3 times EBITDA in recent months. Einhorn's been buying Weatherford in recent years. Oil services, Schlumberger, trading below its 250-week moving average. So oil services, if we go back to offshore and really boost that up in the United States, you're talking about a big boom in oil services. Here's a fascinating stat. So think of like the debt ceiling that we hit in January. There's been no new net issuance of debt in the United States since January. And so what's fascinating about this, and this is why I think the bond market's been so uneasy, and everybody knows about the Dalios talked about this, and Paul Tudor Jones and Gunlack. So essentially, between August and the rest of the year, it's 1.5 trillion of catch-up issuance. So this Liz Truss moment, everybody knows this, and this is why Bessent's put some guns on the table with the SLR. He's threatening the bond vigilantes, the SLR, which we can get into, the supplemental leverage ratio. But at the end of the day, we're talking about financial repression. They're going to try to force the banks to buy more treasuries. This debt issuance catch-up between August and the rest of the year is $600 billion more issuance than last year. The only way out of a $37 trillion debt hole is financial repression, and that's massaging interest rates below the rate of inflation. In the Bible, they talk about debt jubilees, and there's been many debt jubilees in Argentina. But in the United States, we're going to inflate our way out of this mess. And that's why for later in the year, some people, one of the things we recommended in our Sunday Turning Point, we're long a lot of platinum, palladium. We basically have a very, very dollar short portfolio. And we're really concerned about a dollar counter trend rally here. Because guess what? You think of all that issuance, Besant has told you, he put the gun on the table, he's told you he wants to issue less longer dated paper for right now, more shorter dated paper. If they do that $600 billion of issuance above and beyond last year, that's a lot of T-bills. It's a lot of 1 years, right? A lot of 6 months. That pushes up the front end, that sucks dollars back into the United States. That's why the dollar's starting to counter trend rally here. So we've taken down some of our hard asset plays because we think we could get a couple months where you get that rally in the dollar. And the rest of the world is starting to really fiscal up as well. Bloomberg Dollar Index, you can see there, washed out on long term, the 200-week moving average. And you've got a bounce right now, the last week and a half of bouncing off that level. Fascinating that we're below that 200, that was support for a long time, the 200-week moving average. Now I think it should be resistance. That's what we want to look at, really adding to that hard asset portfolio when the dollar gets back up near that 200-week. One thing we're seeing, commodity-producing countries, Chile, Peru, Brazil, dramatically outperforming the United States in recent months, and the Bloomberg Commodity Index you can see there, commodity-producing countries very, very sensitive to countries like Brazil are very, very sensitive to commodities. So that's one thing we're seeing investors kind of diversify into global equities, into more commodity-producing countries. Now, natural gas, the top 3 stocks, Stephanie, you're going to love this. The top 3 stocks in the FCG, which is the natural gas ETF, the top 3 stocks, combined market cap, $250 billion, versus NVIDIA at $4.1 trillion. Unbelievable. And the only way Jensen, I call Jensen the great pump master. When he's on stage, he's an amazing pump master, Jensen. What Jensen won't tell you, and he's just starting to, the only way you get to NVIDIA's valuation growth trajectory is if the natural gas complex, those equities probably have to triple. Because natural gas is the path to the green meadow, as we talk about in the book. And recently, look at Antero, AR equity. Companies bought back, literally, within the last year, it was trading at 3 or 4 times EBITDA, free cash flow yield around 10%. Companies buying back 10% of the stock. Those type of equities are really starting to outperform the S&P. Software names in a lot of pain because of AI. Mag 7, underperforming since December. The NUKZ, we've done a lot of trade alerts. Anybody that wants to be on our trade alerts, it's info@thebeartrapsupport.com. We've been buying, this is time and sales track, buying the NUKZ. Now, this is really your kind of like your independent power producers. Stephanie mentioned Quanta. What I like about the ETF, it has the uranium names and the independent power producers. And for younger people, what you want to do in a situation like this is wait for, kind of have that wish list ready for when the market pukes. And in the last year, since last August, we've had 2 colossal pukes in the market. The yen carry trade blow up in August. These stocks were absolutely hammered. And then in April, like once again, this is the key, the pathway to the green meadow. We've been recommending the NUKZ since it came out. The uranium trade, there's a whole chapter in our book on the uranium and the whole concept of AI and independent power and the power renaissance that we have coming at us. Copper, everybody knows the bull case for copper. But when you talk to Adrian Day, I sit down with Adrian Day in the book. If you look at countries like Panama, we have a home in Panama, I have a home in Florida. The political pressure on these governments to stop producing copper is just mind-blowing. And if you talk to people like Adrian, the previous 30 years, the amount of new copper mines coming on, we're not even 10% of the previous path. And that's because of a lot of political pressure in Chile and Peru. And so the probability that we have a copper crisis, Stephanie talked about the power grid, 50 years old in some places, 30 years old in others. The only thing that's going to, we literally could have an OPEC-style crisis in copper. Think of the structures in the Ukraine that we talked about, the structures in Gaza, the structures in Los Angeles. There's hundreds of thousands of structures. And so that, thank you. The power and the copper, and one thing that we're hearing from clients as well, aluminum. Aluminum, look at Alcoa. Alcoa is aluminum's kind of that cheaper copper alternative. And so if copper prices go up another 30, 40, 50%, the demand for aluminum on the power grid is also incredibly bullish. So the COPX, as you can see, they're outperforming the Qs, right? And you see that whenever you see a weekly MACD cross or a monthly, that's kind of seller exhaustion. That's a weekly MACD cross, very bullish. And so copper equities destroying the Qs this year, gold miners destroying the Qs this year, platinum and palladium destroying the Qs this year. And then you got copper gold, seeing real buy signals in the copper gold ratio and the gold silver ratio. This is, I think the mothership is about to hand the reins off to platinum, palladium, silver, and copper. Copper is as cheap to gold as we've ever seen it. And the probability that copper outperforms here the next year and a half, and I completely agree with Stephanie's thesis, this is something we want to keep an eye on, that ratio. And once again, gold-silver ratio, in a bull market for metals, the gold-silver ratio should be 55-60. We're to recently be stuck up above 90. Breaking that level there, once again, you get a bullish MACD cross, very bullish. I think that's on a daily. And so that's another trend, a trend towards silver. Everyone's heard about the incredible, robust build-out of solar in China this year. They've tripled the production over the last year and a half, 2 years. And once again, it's a huge solar driver. Not many people are talking about that now. Silver is still 25% off the highs, 25%. Big trend here, EWU. So your EWU is your global value. What's fascinating is when you're in that DCF model that I talked about, that certain deflationary regime, for 10 years, global value equities underperformed the NASDAQ. As you can see here, the last 5 years, they're starting to outperform. And remember, these are companies that own hard assets, your BHPs, your Rio Tinto type companies, your BPs, your Glencores. And so global value in an inflationary regime, this is something you want to listen when markets speak. This speaks to that regime shift that's been going on, once again, since the big fiscal blowouts of 2020. Same thing here, XLK versus the metals. Metals crushing tech. So, and this one's a little different, but as that moves lower, that's the XME outperforming. And so your metals are crushing tech going back out 4 or 5 years now. And so once again, if you're moving into that new regime, there's another indicator. Same thing, industrials. Your industrials, think of this. In 1980, industrials, oil and gas, and materials. Industrials, oil and gas, materials in 1980 were 49% of the S&P 500's composition. 49%. In recent years, we got down to 12. Okay, so you want to watch for, if we're really moving into that higher bond yield inflation regime, which we've been in, then you're going to start to see more outperformance in the industrial space. And like Stephanie, that's why Stephanie's talking about industrials too, her global industrials. So this is something fascinating. Once again, 10 years of a beating, and all of a sudden, since the big fiscal blowouts, you got outperformance here from industrials. Silver versus Qs, very similar, outperforming dramatically. Silver versus Qs, early stages there. I mean, you're talking about a ratio that 2010 got down. I mean, we're 14 versus potentially down to 1 or 2. So this is a big picture theme, silver versus Qs. And here are the metals. So there are the metals. You got platinum, palladium, year-to-date, copper. As you can see, year-to-date, the migration is happening slowly but surely, but it's got a long way to go. And that's outperformers. Anybody that wants a copy of the slides, info@thebeartrapsupport.com. EEM, once again, Brazil, Chile, Peru, a lot of emerging market countries outperforming the S&P this year by a lot, and that was the weaker dollar theme. The dollar rebound could threaten this, but that's going to create a great buying opportunity. Oil services, once again. Oil services, you want to start thinking about oil services relative to the big oil production. You got to break out there. So once again, that's that move toward offshore drilling in the United States, Trump trying to build out U.S. offshore. Palladium is the Palladium ETF, is PALL. Early stages here. This is what we call the bombed out village. Absolutely destroyed 10-year bear market, making you always want to be there for the turn. That's palladium, now we're in platinum, same thing. Electric vehicles, we talk about this in the book. The EV, they told us in the Green New Deal that the EV penetration would be here by now, it's down here. Hybrids are taking over. Trump's pushing hybrids. This is getting you a big move into platinum and palladium for catalytic converters. Weatherford, cheap stock. A lot of institutions are buying oil services that we can see. Lithium names. I'm going to close it out with lithium. Big, once again, this is the lithium companies who were colossal victims of the Green New Deal brainwashing, the kind of green world. I'm a big believer in carbon neutral. It's just going to be 2100, not 2050 or 2030. I'm a big believer in green. It's just another 100 years out. And that's why you want to start thinking about lithium again. Institutional investors that we respect are really starting to look at lithium again. Bombed out village because of the fears of that EV penetration. And now you're starting to see solid state batteries. Fascinating, and Stephanie talked about this. Fascinating move, solid state batteries give EVs longer road time. And that gets you more demand for lithium. And you get a bullish monthly MACD cross. Core natural resources, last name, and that's coal. There's 1 billion people in India. There's 1 billion people in India that don't have air conditioning. There's 1 billion people in India that don't. The first thing young people do in India, they get a moped. But I think we're over, and I think we're just wrapping up. But thank you so much. These are some big themes. It's great to follow up after the speakers here. And anybody that wants to I think we're going to get on stage and do a little Q&A. Right?
We can do 1 or 2 questions now, and then we'll get the panelists up there and do some more then as well.
Okay.
If we've got 1 or 2, just solely for Larry, and then again, Larry's going to be staying, and we'll get more after that. Unless nobody's phones have it. Oh, here we go, right up here in the front. And then we'll take the one in the back over there.
So I was just thinking, the political situation, seeing that there's so much debt, America has so much debt, do you see any strategic, long-term kind of strategic devaluation kind of in the works, because we got so much debt?
Right. I mean, that's the theory in our book that we laid out, is that eventually the Fed gets forced into yield curve control.
There was another one somewhere back.
And if the Fed gets forced into yield curve control, dollar is going to weaken more. And essentially, that's when I talked about the SLR. The SLR is Bessent putting a gun on the table. And you know what? You know who Scott Bessent is talking to 2 to 3 times a week? Anybody? Who do you think Scott Bessent's, his phone line is burning up? Stan Druckenmiller, right? They used to work together at Soros. Druck has got the playbook for getting out of this Liz Truss moment. And the way you get out of it is you use the bank's balance sheets. You force the banks to buy treasuries. And that's why Ted Cruz recently threatened the banks on interest on excess reserves, taking that away. That's basically a gun on the table. And saying, Jamie Dimon, you're going to buy more treasuries whether you like it or not. And you notice Jamie is selling, he sold 30% of his equity in the last year of JP Morgan, and Buffett has sold, literally he had a billion shares, of Bank of America, now it's down to 600 million. So Buffett and Jamie are selling the banks as fast as they can. What does that tell you?
I think we had one in the back left over
Yeah.
there.
Hey, Larry, a quick question. So we've got China at $20 trillion and growth's gone from 8-9% a few years ago down to low single digits and continue to point toward growth slowing trends there. You've got Europe, Russia, all that, $30 trillion, $50 trillion of the global economy, half the world's economy. They're below replacement rate on birth rates, and the economies are slowing, if not going negative, for a lot of Europe. How do you square that with some of your projections in terms of growth in some of these parts of the world where we're just going to have negative growth, and therefore coppers and metals and all that aren't going to be really needed because they're just not going to have the money to buy things?
Right. Yeah, so that's why the one thing that is concerning is the bond yields in China. And the bond yields in China point toward a deflationary bust. One thing that they have historically done to get out of that is fiscal up again, right? Which we've heard these, it's almost like they've started the engine a few times. And David Tepper got on CNBC. David, I sat down with, he told me no 30 times. But you have to have that burning desire to ask and get smarter. But I went out to his office, and one of his themes recently is China, right? So he's getting long China over the last year, and that's because eventually China's going to fiscal up again. Europe's fiscaling up aggressively. The demographics do bother me, but in other parts of the world, India, you've got very powerful demographics, right? So it's definitely a concern. I'm not going to say I'm not going to, but I just think you've got governments around the world that are all trying to really move toward American exceptionalism, and all American exceptionalism was just 8% annual deficits, right, or 6 to 8, which is World War II type, around World War II type deficits. That's where we've been for 4 years now, and I just think there's just too many bonds for sale. The Fed gets forced to support the market, and that's why Trump's so nervous around a Fed chair. And if the Fed that's when you go into a real inflation bounce. Whether or not that's sustainable, that's a great question. But I still think you get a nice runway of inflation for the next year and a half, 2, 3 years, and which means you've got a whole new different portfolio construction for the next 2, 3 years.